Hey everyone, happy Monday. Welcome back to another Monday Market Update. I am sorry that this is not my normal background. I know the lighting's probably awful, the audio's probably awful, but I am traveling this week for a conference in Las Vegas. You can see the strip out there. Well, you can't, but I have a beautiful view of the strip. And unfortunately, it doesn't make for the best background, but we're here and we're going to talk about the market. That's why we're all here. So if you're new here, I'm Caitlin McKegg. I am a real estate broker here in Phoenix, Arizona. Well, in Phoenix, Arizona. And every Monday, I give an update on what's going on in the real estate market and kind of the overall economy. So let's jump in and talk about it. If you're new, make sure you hit that subscribe button so you can stay up to date. All right, guys. So I'm going to do my best because I only have one monitor today, and I'm going to be still showing you some screen shares and whatnot. So hopefully this works out. But let's start talking about the overall economy. So reports came out last week. The final GDP estimate for Q2 confirms negative economic growth. Why is this important? Because some people say technically that two consecutive quarters of negative growth for GDP constitutes a recession. That's the technical definition. As you read through different articles, some people disagree, some say different things, but this article is talking about that. So these numbers just came out. Let's see, negative GDP stirs debate over a recession. Just before the first estimate of second quarter data was released, White House Council of Economic Advisors said even if the GDP report was negative, it was unlikely to indicate a recession. See, there you go. Mixed reviews on that. But either way, obviously, we're having some contraction in the economy, and this will likely lead to a recession if we're not already in one, right? I think that's what everyone at least assumes. So, how is this important to real estate? Obviously, it ties into interest rates. Interest rates continue rising despite contraction. So typically when we start to see a recession, they'll bring interest rates down, right? So that people can spend more, but we're not there yet. We're still at this place with really high inflation. And so the Fed has no plan whatsoever to bring down interest rates at this point. They are only continuing to raise them. So that said, we also had the numbers for the core PCE, which is the Fed's favorite way of measuring inflation. It's the now I'm blanking, the personal consumption expenditures. I was almost saying price. And it rose 0.3% last month, month over month. However, year over year, it went down by about 0.2%. So largely not a huge change. Bottom line here, this story talks about basically these numbers and how the Fed will continue to raise interest rates. Same story, nothing shocking. So, we just have to be prepared for that. Rates actually got into the 7% range for mortgage interest rates last week. So hit a new, not really a record, but for now, for the last, I don't know, I think these are the highest rates since 2007, somewhere in there. So interest rates are definitely on the rise. That's affecting our buyer demand and the overall real estate market. So let's talk more about what's going on in Phoenix, because I really want to talk about active listing counts today, because we're hitting a new record on one thing in the active listing counts, and I'll dive into that in a second. But obviously, these active listings are piling up on the market because we don't have the buyer demand that we need to absorb them. Now, it sounds scary, but I'm going to break down the numbers in a few different price ranges for you, which ones we're hitting records on, and then how that compares to the past years of months of inventory, because I think that's important to look at. So let's switch over. Here's our active listing count for 2022. We just hit 20,000 active listings on the market. This is the first time we've seen this number since March of 2017. So pretty big deal. It's been a while. However, the long-term average for active listings on the market is about 25,000. So we're not beating records as far as numbers we've never seen before. This is just a number we haven't seen in a long time. So 20,000, quite a lot of active listings on the market. And you can see there's kind of been a little bit of an uptick here over the last few weeks. And we were leveling off for a bit. This is, this summer as things really drastically changed and we climbed up. But here we are sitting at 20,000 active listings. Now, I want to break this down by price range because there's some important information within that the Cromford report was sharing. So if we look at the price range, and unfortunately they don't have a graph for this, so I'm just going to give you some visuals on the screen here. The price range between 350,000 to 400,000 has about 2,082 active listings right now. And that's the first time we've seen that many in that price range since January of 2008. So that's a pretty long time to not have seen that many active listings. Now, if we look at the range of 400 to 500,000, we have about 4,456 active listings currently. And that is the first time we've ever seen that amount of active listings ever in that price range, 400 to 500,000. So that's kind of mind blowing. We've never had that many active listings at one time within that price range. If we look at 500 to 600,000, we have about 2,510 active listings. And that's the first time we've seen that number since December of 2007. So obviously a little bit of a trend here. January 2008, December of 2007 for those other price ranges. But what is going on with the 500 to 600,000 price range? Why do we all of a sudden have a brand new record for that price range? Well, it's because this is our new price, our new median. Sorry, I had the wrong numbers up there. Our new median price range, we're at around 450,000 for the median in Phoenix Metro. So obviously, you're going to see a much larger pool of listings in that price range now than we've ever seen before, right? We've never had that be kind of our bread and butter price range until the last couple of years. So that's why we're seeing this record, so to speak, for number of active listings in that price range. But let's talk about months of inventory because these numbers don't really mean much when I say 4,000 active listings, 2,000 active listings. Okay, great. But what does that actually constitute? What's normal? So if we look at the price range of 350 to 400,000, we have about 3.3 months of inventory. So that means if no new homes came on the market after today, it would take us about 3.3 months to sell everything that's active in the price range of 350 to 400. So that's our absorption rate or months of inventory. Now, if we look at the 400 to 500, that's about 3.8 months of inventory, and 500 to 600, 3.7 months of inventory. So that's not a lot of inventory. So to give you some context on that, a balanced market is somewhere around 6 months of inventory. So we're still pretty low as far as these active listings go in these price ranges, even though we're breaking records. Again, it's just a shift in what the bread and butter of our market is, which is a higher price point than it's been in the past. So let's look at active or months of supply on a historical basis. So this takes us back to 2010. So here at 3.2 months of inventory for the valley as a whole. Again, if 6 months is a balanced market, we're still in a seller's market technically, and still below that kind of balance. If we go back to 2019, we had 3.3 months of inventory. Obviously, the last 2 years have been an anomaly. These 0.8 months of inventory, 1.8, that is extremely low. But you look back here, all of these peaks and valleys were around the 2, 3, 4. And then when we were in a balanced market the last time, which was in 2014, we had 5.4 months of inventory. So you can see there, that was much higher than where we're at today, although it's possible we could get to that point. We'll have to see. But 3.2 months of inventory isn't anything to be concerned about from a perspective of a market crash or anything like that. This is pretty much seeing a correction here. We're seeing prices go down. We're seeing demand go down. We're seeing longer days on market. We're correcting back to a normal market instead of the massive frenzy that we've had over the last 2 years when everything was unpredictable and just kind of insane, for lack of a better term. So that's where we're at with months of supply and inventory. I think it's interesting to see kind of the new price range and where that stands today. So we'll have to watch this because this really helps us understand how the market is trending, if there's enough demand out there or not, if we're going to have an oversupply of listings or not. So months of supply is a good indicator to watch. Now let's talk about the Cromford Market Index. If you're new here, I follow the Cromford report. That's where I get all of this information. I'm a subscriber to them, and they give a lot of great data to their subscribers. And they have this Cromford Market Index that helps us understand supply and demand in the market. And basically, as you can see on the screen below, 90 to 110 is considered a balanced market. Over 110 is a seller's market, and below 90 is a buyer's market. And so where we're at today, we're at 104.2. Still hanging out in that balanced range. I think we've been around 104 point something for the last handful of weeks. You can see our demand is still in the 80 range. It had popped up from about 78, 79 into the 80s, and then supply is at 78.3. So as you look at this, 81.6, about 19% below normal for demand. 78.3 is about 22% below normal for supply. So we're undersupplied and we have low demand. And so that's just keeping us kind of in this balanced range right now. It will be interesting to watch demand now that interest rates have gone up to a new record for the recent times, and see if this demand number starts to go down or not. I don't know. We'll see. That's where we're at with the CMI. All of you last week missed this weekly chart. I'm so sorry. The Cromford report did not have this updated, unfortunately, last week, so I wasn't able to share it, but we have it now. So this is where we're at this week. We actually have 6 cities now with these green arrows. So we've got Scottsdale, which has always been there, Chandler, Glendale, Mesa, Tempe, and Gilbert. And the green arrows mean that these cities moved in a direction favorable to sellers over the last month. So this percentage change is month over month. So it increased 6%. The CMI increased for Gilbert 6% month over month. And it got higher. So it went from 75.9 to 80.2. So it increased in favor of sellers because it has become more of a seller's market there than it was before. However, a CMI overall of 80.2 does mean we are in a buyer's market. It just trended towards more of a balanced market than a buyer's market in the last month. So we'll see if that sticks. Again, same with Tempe, Mesa, Glendale, Chandler. All of those are kind of new. And it's interesting to see Paradise Valley and Fountain Hills both went down. Those have been the strongest for us. And they still are. They have the highest CMIs. However, they deteriorated for sellers a little bit over the last month. So it'll be interesting to see what's going on. All of these cities here are more of the densely populated suburban cities, and they're starting to see their demand hasn't changed all that much and supply isn't going up. So that's kind of what is pushing these cities to be moving back towards the seller's market, albeit still in a buyer's or balanced market, if that makes sense. So that is your weekly chart. So hopefully that helps for all of you that are tracking that on a weekly basis. And that pretty much does it for me. So thank you for bearing with me with this horrible background and probably horrible audio, but I'm glad I was still able to get on here and share what's going on. Again, if you are new, hit that subscribe button. If you want any resources, check the description. You can get an instant home valuation, search my MLS. I also have a relocation guide, and you can reach out to me with any questions. All that info is in the description below. So thanks for joining me, you guys. I hope you have a great Monday. Enjoy Monday Night Football, and I will be back later this week. I'm Caitlin McKegg with the Desert Dreamers team at HomeSmart.